Hey viewers. Welcome to our YouTube channel Everything About Accounting. If you want to learn accounting easy and simple way, you are in the right place. In accounting, we all know that the accounting cycle is of immense importance. For better accounting studying, it is very important to understand the accounting cycle. It is sometimes very hard for beginners and non-accountants to recognize the accounting cycle. So, in this video, we will learn 1. What is the accounting cycle? And 2. What are the 10 steps of accounting cycle? Before we start, please subscribe to our channel and hit the bell icon for getting the regular updates about accounting videos. So, let's get started. One. What is the accounting cycle? According to the going concern concept, it is expected that business will continue on forever. The accounting process starts through the identification of transactions and ends with preparing financial statements. These processes are rotated continuously in every accounting period. So it is said that the accounting cycle is the continuous process of recording and processing of all transactions of an organization. 2. 10 steps of accounting cycle. 10 steps of the accounting cycle are as follows. 1. Identification of transaction. 2. Journalizing. 3. Posting to ledger. 4. Preparation of trial balance. 5. Adjusting entry. 6. Adjusted trial balance. 7. Preparation of financial statements. 8. Closing entry. 9. Post-closing trial balance. 10. Reversing entry. Now, we try to understand in detail the 10 steps of the accounting cycle. 1. Identification of transaction. The first step of the accounting cycle is the identification of transactions. Transactions are identified after analyzing all events. The only financial transaction would be considered a transaction. The transaction may include the purchase of goods, sales of goods and services, any operating expenses, any payment, etc. 2. Journalizing. The second step of the accounting cycle is journalizing. Here analyzed transactions are recorded in the primary book of accounts as debit and credited chronological order. Purchase book, sales book, purchase return book, sales return book, note receivable book, note payable book are the primary book of recording transaction. For example, purchase of goods from Oyo International $3,000 on credit. The journal entry will be as follows. Purchase account debit. And Oyo International account credit. 3. Posting to ledger. The third step of the accounting cycle is ledger. Ledger is the main book of accounts. Here transactions are transferred into the ledger as a separate head of accounts. Different ledger is prepared for each head of accounts, such as purchase account, sales account, salary account, advertisement account, etc. For example, please look at this screen for sample ledger. 4. Preparation of trial balance. The fourth step of the accounting cycle is the preparation of trial balance. It is prepared to testify the mathematical accuracy of the recorded transactions. The trial balance is prepared with the concerned accounts head along with the debit and credit balances of the ledger. It is prepared at a certain time period. For example, please look at this screen for sample trial balance. 5. Adjusting entry. The fifth step of the accounting cycle is adjusting entry. The journal entry which is given for adjusting accrued and prepaid income and expenses to identify the actual financial condition of a business of a particular accounting period is called adjusting entries. Such as, adjusting entries for accrued salaries, prepaid insurance premium, unrealized income, and expenses, etc. For example, accrued salary for the month of June 2019 is $4,000. The adjust entry will be salary account debit and salary payable account credit. 6. Adjusted trial balance. The sixth step of the accounting cycle is the preparation of adjusted trial balance. Here again, adjusted transaction are transferred to ledger as a separate head of accounts, then adjusted trial balance is prepared with the balances of debit and credit of ledger. For example, please look at this screen for sample adjusted trial balance. 7. Preparation of financial statement. The seventh step of the accounting cycle is the preparation of financial statements. The financial statement is prepared to identify the profit and loss, assets, liabilities, and owner's equity of a business at the end of the accounting period. The financial condition of the business is determined through financial statements. For example, please look at this screen for sample financial statement. 8. Closing entry. The eighth step of the accounting cycle is closing entry. There are two types of accounts in the business. One is income and expense related account, another one is asset and liability related accounts. The necessity of income and expenditure related accounts are finished in the accounting period. So, closing entries are given to close the balance of revenues, expenses, and drawings account at the end of the year. For example, please look at this screen for sample closing entry. 9. Post-closing trial balance. The ninth step of the accounting cycle is the preparation of post-closing trial balance. After closing entries, ledger balance of income and expenses become 0. The next accounting period will start with the remaining balance of asset, liability, and owner's equity account. Post-closing trial balance is prepared with these assets, liabilities, and owner's equity balances of ledger. For example, please look at this screen for sample post-closing trial balance. 10. Reversing entry. The 10th and final step of the accounting cycle is reversing entry. Reversing entry is the opposite of the adjusting entry made in the last accounting period. For example, please look at this screen for sample reversing entry. At the end of the video, I think you're clear about the accounting cycle. If you like this video, don't forget to comment, like, and share. You can also visit our official website www.everythingaboutakcounting.info for more updates. Thanks for watching.